So, as Paul said, my name is Tim Creamer. I'm the Chief Operating Officer at Ellipse. My background is I started out as a medical underwriter, or probably a data capturer, medical underwriter, and was involved with, or my first involvement with an underwriting rules engine was back in 1997 when we put the Magnum rules engine. It was their first implementation at point of sale. All of our competitors were using it as a back office, and we said there's no point. So in 97, we put it out as a point of sale. I was the underwriter, the project manager, and the trainer and rollout in that project. I've always worked for small startup companies. I find it challenging, intriguing, and don't quite regard myself as a maintenance person. If it's about turning the handle, it's not for me. Yeah, I joined Ellipse as part of the team that started Ellipse, and I'll tell you a bit more about that. But before we go into this little story, there was an astrophysicist that had published a paper, and he was doing his rounds around the universities, going around and presenting his paper, and his chauffeur had driven him around from one university to the next. And at each presentation, he'd open for questions, and nobody asked questions. They stood and they listened with a look similar to Alfred's on his face, just, what is this all about? I mean, and by the time he came to his sort of final presentation, his chauffeur, as they were driving along, said to him, I've been to every single one of these presentations. I could stand up and give that presentation verbatim, and nobody would know the difference. Nobody knows you yet at this university. And this guy was quite bored with presenting the same topic over and over and over, so he said, okay, fine. You do it. Let's swap places. You present. So they did. They changed outfits, and the chauffeur had, the professor had the hats, and the chauffeur got up, and the chauffeur did the presentation, and he said, now we'll open for some questions. And somebody put up their hand and asked a question, and the chauffeur stood and he listened, and he said, that is such an easy question. I'm going to leave it to my chauffeur to answer. So if there are any questions, I may refer them to one or two of the chauffeurs around the room, specialists in that particular area. So this morning I want to talk a little bit about Ellipse. Please, at any point, feel free to interrupt. I know we're heading to the lunchtime thereafter, so we won't leave questions necessarily. So at any point, if you have questions, ask, or it might not. I don't know whether that suits your recording but go ahead. Okay, so who are we? Ellipse is a digital group risk insurer. We're based in the UK. We're part of the Munich Re group, and we do group life, critical illness, and income protection, covering employees or employers with at least 2 employees and above. We don't go to 1 because that doesn't make a group, so we start at 2. And really, this is our story. Take you back some time to tell you our story. Back in 2008, at the height of the crash, August 2008, Munich Re decided, they took the decision to approve a business plan to start a new insurer when companies were shutting down and closing down. Andy might remember this. We worked together at the time. I remember coming out of the tube station or getting off the DLR in Canary Wharf and walking past the Lehman Brothers buildings. I used to get in between 6:30 and 7, and the cameras were lined up on the street outside the Lehman Brothers building from that time in the morning, recording the staff as they were walking into the building and walking out in tears, carrying their boxes, and the cameramen were there the whole day. And it was at that point when Munich Re decided they were going to launch or establish a group risk insurer. And one might think, when the market's crashing, why do you want to be starting up? But they did. So we started in August 2008. At that time, it was, I guess, my boss who had the vision for the business, and one of our colleagues, our chief information officer. It was the 2 of them. I joined in December. I was employee number 5. And it was brilliant. We did everything from meeting with the design agency, determining what our brand was going to be, what did it look like, what did we want it to be, what did we want the message to be that we had for the market, to designing and speccing the systems. I was the chief underwriter, and we did everything. that from start to end, and whatever it was, product design, engage with the reinsurer, it was good. It still is good, actually. Looking at the market at the time, group risk, there were 4 major players. Unum, who most of you probably have heard of or know of, Canada Life, Legal and General, and Aviva. That time I think it was still Norwich Union, wasn't Aviva. But between the 4 of them, they made up 85%, if my math's right, about 85% of the market share. And then apart from that, there were kind of 3 or 4 others that together made up the rest of the 15%. All of them looked very much the same. The approach was the same. The way they worked with the market was the same. There wasn't much change. One of the things that we, I guess, challenge constantly is when we engage with advisors, they always say, the market doesn't work like this. And so, what is the market? There is no standard approach in the market, so just because we don't do that. But these guys dominated the market and they determined the practice, and everybody followed or tried to play catch up to what they were doing. When we looked at it, if we're coming into this space and we try to do what they do, there's no way we're going to compete. We have to be different. And actually, the group risk market, so if you looked at the individual market, it was light years ahead. Which kind of gives you an idea, if you look at where the individual market is now relative to other industry sets, it isn't up there. If you look at banking and others in terms of digital and advancements, insurance is kind of trying to make their way back to catch up to where some of the other players are in other industries in terms of innovation. And if individual protection was light years ahead, where group risk was relative to that. None made investments in systems, in process, in any of that. We couldn't compete on the same basis. We had to be different. We felt it was time for change. Hence the birth of Ellipse. If you just give me 1 minute, I'll just show you a short clip about who we are.
We've been thinking about our sector and the way we work together, listening to what people have been saying, and it makes us wonder, can things work better? The way our market operates today may be okay, but we think that okay is no longer good enough. We want to go beyond the okay. The way our partners work and our clients view employee benefits is changing quickly. It is time to take a different course. To be more efficient, more precise, more professional, to be more answerable to our clients, to work together and make things better for everyone. Process by process, system by system. We're redesigning the way to do group life and disability insurance. How are we doing this? By embracing what technology enables us to do. Quotes shouldn't be drawn out over weeks and months. We're introducing a better quotes process for all sizes of scheme. For instance, we've automated our quote system for small schemes to save everyone time. A definitive, binding quote. Not in days, in minutes. No more toing and froing. On data, we'll ask for better quality core information that every employer can readily provide. By focusing on getting accurate data up front, it means we will be more efficient in the long term. We're introducing direct data links to the organisers of schemes, adding to your efficiency. As for medical underwriting, we've redesigned our whole approach. For the few top busy people who'll need it, we've introduced smart, secure online tools and minimised the medical evidence we require. If we ask for any tests, we'll let the member decide where and when it suits them. Not only that, we'll manage it all, from beginning to end. Finally, no more chasing paperwork. That means clearer, more precise and timely communication. We'll provide totally secure online hubs for uploading and downloading data and documents, because we want everyone to be able to get on with their real work. Small changes maybe, but added together, they'll make things a bit better than just okay. We're Ellipse. Join us. Together we can do group risk better, much better.
So that was our approach. We were going to be different. We couldn't do the same things. We looked within the group to decide actually, there's a lot of assets within the group that we can utilize. Let's utilize that. So we went across to MRAS, then All Finance, and said, we're part of the group, guys. Give us your kit and we'll make it work for you. To which they said, nice, but no thank you. We tried again and they refused and we had to pay for it. But, you know, if you look at it in terms of individual protection, you're underwriting loads of people. And it makes sense to implement this type of technology in that space. In the group market, you've got, I don't know how many know the group market and how it works, but you have automatic acceptance limits, so acceptance-free limits where you don't underwrite people, you're only really underwriting the peak risks. And the question is, why would you spend so much money to implement this technology when actually you're only underwriting the peak risks? The reason being, or the reason why we did that is those peak risks are typically the CEO, the CFO, the key individuals in any organization. We wanted to make that process easier. The typical process with those people, once they're identified, the insurer would go, he would send a letter to the advisor or request, who would then send it to the HR, who would then send it to the CEO and say, we need you to complete this questionnaire. That might have been a month since he was identified. He then completes it and it goes back through that chain to the insurer, who then say, oh, right, you got diabetes, we need these medicals and these blood tests, and that goes through that process again. And 3, 4, 5 months down the line, the guy says, I don't care about it, forget it. So there's this uninsured liability that the employer sits with, because as part of the employer's promise, if they haven't changed the contract to say, unless the insurer covers you, they have to pay that liability. We felt we could do this differently and could do this better. So we employed the kit. From 2008, we started, as I said, designing the products, getting the software, the integrations happening. We had several sessions with our colleagues in Dublin and our IT provider. We don't have an in-house IT team. We outsource our infrastructure, our development, and we began on this journey getting the thing ready. And in 2009, around about October 2009, we sold our first policy. We actually hadn't gone live at that stage with the URE. It went through a month or two later. So the first one, we kind of had to do it manually. We did a tele-interview. We asked a couple of questions and we underwrote the guy. The proverbial we being me. And at that stage, I was designing the rules. We were working with the guys on the lookout, the lay and feel, the changes we wanted to the technology. In 2010, the end of 2010, we were 25 people and we'd written quite a few policies. Premium income had started to come in. Not quite according to the plan, but it was kind of, we were writing business now. As I said, the All Finance interview server was live from day one. That was key because it meant the process was more efficient and effective. Our competitors, as I said, could take 3 to 6 months to try and underwrite people and quite often not get it done. We were doing this in minutes. The fastest, actually still today, interview that completed was just under 9 minutes. Happened at 2 o'clock in the morning, actually. This guy went in and completed his questionnaire and he was given the decision immediately and he was on risk. 2011, we were up to 27 people. At that stage, we then went live with our online quote system. So I was the chief medical underwriter and I look after the scheme underwriting area as well. We then took what we did with the medical underwriting rules and we said, we're going to do this with the scheme underwriting. We're going to automate this. Nobody else in the market does schemes to that size. I think all of our competitors, the most they will do is quote for 100 people. And if it's between 20 and 100, they don't do less than 20 and 100 people. And we launched our online quote system, up to 500 lives. And the market embraced it with open arms. Absolutely not. They totally resisted the idea of doing up to 500 lives. Why? Because I can send an email to all the insurers in the market and I can wait for them to do it and I'll chase them up after a couple of weeks and I'll chase them up and to get them to see that actually that is not productive. That's not the best way to do it. You can do it here and within 15 minutes you'll have a quote and you don't have to do any chasing up. But everybody else doesn't do that. They'll do up to 100 lives. And so we said, okay, fine, then we won't do business with you if you're not prepared to do it that way. Again, another bold move, but we stuck to our guns. And it did mean that our growth was slower than we wanted it, but things did change. Later on in that year, we launched online data refresh for members. So again, absolutely resisted by the market. Everybody else lets us send them their data and process. Well, we've got 27 people. We had at that stage 3 scheme underwriters. Unum had 150 scheme underwriters. We're not going to work in the same way. Our model doesn't work in the same way that theirs works. If you want to do it with us, this is the way you have to do it. 2012, we were up to 30 people and just on 10 million premium income. We then went live with technology that we call Livewire. If you remember in the video, the guy was sort of throwing a little jet and it kind of said, we'll integrate to platform providers. That was our message up front, and we got it out in 2012. Interestingly enough, in the beginning of 2013, our major competitor said, the next step, the next big thing is going to be integration to platform providers. And we were like, well, actually, that's past now, guys. Let's talk about something else. But effectively, and I don't know, I think this is common in other markets as well, but in the UK market, you have the ability to do flexible benefits. So you can choose how much life cover you want, you can trade leave, buy leave, etc. And the data can be done real time. With that integration to those platforms, we can get the data directly into our platform and be updated. The challenge was, but the competitors only take data once a year, so we don't have to do this quarterly or do this annually. But then it's not real time. For the small advisor or for the small clients, you're paying a premium, you don't quite know, even the big ones, you don't quite know at the end of the period if you're going to be in for a shock in terms of your budgeting because, oh, hang on a minute, you need to pay a lot more because your membership has changed. Whereas if you're doing it constantly, you're getting real-time changes and real-time costs being charged to you. And it was a big challenge to get the market to start to see it that way, that different is not bad. Actually, there's benefits in being different, and different can be good. It's an opportunity for you. Some of the really big EBCs said, well, if you don't do it our way, we won't do it at all. And we had to take a bold decision because they hold 50, 60% market share amongst them. And we said, okay, well, we won't do it at all. We'll go with some of our competition. And we went, they came back to the table because they started to lose schemes for advisors that were quoting us. And then they came back and said, okay, well, let's have a conversation about what we can do. 2013, we were up to 38 people. Premium income was around about 25 million. At that stage, we went live with voluntary quotes and flexible benefit systems online. None of our competitors, again, do that at all or quote that at all. 2014, premium income was just on 30 million and we were up to 43 people. We then launched our online rate review, the ability to review your schemes online without submitting them to us. All of these changes, so effectively at the moment we have 2 system releases and we're trying to get that up to 3 to 4 a year, to have 1 every quarter to be releasing updates and enhancements to the system. In the beginning it was relatively easy. Now it's a challenge with production and testing and system releases with sort of 43 people. It is a challenge. And as at the end of August 2015, our premium income has been up. We're at 42 people, and our premium income is up to 35 million. And now in December, we will be doing a review and a release of our online accounting or policy accounting with just over 2,000 policies. So to date, that's kind of been our growth. Obviously, as you can see, the curve, what we want to do is kind of keep that crocodile effect. If the premiums can go up and the expenses kind of remain there, it works for us. As I said, our competitors, we've got at the moment 7 in our underwriting team. Our competitors are averaging 100 to 150 underwriters in their underwriting teams. From feedback that we've had, it takes us to issue accounts on average 10 days to issue an account from the time we receive the data. One of our main competitors, and I won't mention the name because they are represented in different guises, takes them 4 to 6 weeks to issue an account. And others are actually even longer than that. Some of them are 3 to 4 months before the client actually gets the account produced because of their backlogs. So what does the market look like? I said in 2008 you had kind of the 4 top players and then a big drop down with the rest. Scott Eck no longer in the market, Bupa no longer in the market. They were then taken over by Friends Life, who in 2013 had 9% market share, and we were kind of there with 1%. Zurich launched, and they were at 5%. They launched just ahead of us, actually, in 2008, and that was they were at 5%. As at the end of 2014, quite a change in terms of the market share. You'll see Unum, obviously, they'd gone down, been losing market share, not drastically, well, I guess from 2008 to 2013, a big drop, and a few others coming up. So there's been a lot of change in this market, and actually Aviva and Friends Life have now merged, so that group will obviously grow. Great for us because actually probably for the next 2 years they're going to be focused on how they bring these 2 businesses together and what they need to do to merge them, and lots of people going. I mean, there's quite a lot of turmoil in the UK market. LNG closing down some of their offices. I think in one of the areas, the office they're closing down, about 700 people affected by it. So there's a lot of uncertainty there with those competitors. For us, we continue to grow slowly but steadily. We don't want to take on more business than we can handle because we want to be able to maintain our service level. So making sure that the technology is there to support us. So how has it gone for us in terms of our achievements? In 2011, we were rated second best in terms of the technology in the group risk sector by an independent company called FNTRC. In 2012, we were rated first, which we were pretty pleased about for a 4-year-old company. We'd won the first place. Every quarter, we survey our advisors to see how we're doing in terms of service, price, etc., etc. In 2013, we were rated 8.1 out of 10. That was our highest rating. On average, we're between 7.8 and 8 out of 10 when we survey them. 2014, we won the Cover Award for the Best Group Life Provider, and we were ranked second overall by an independent survey run by the ORC. That's across 4,000 EBCs and independent advisors. We were rated second. Moving on to 2015, we were the clear leader in the ORC survey in terms of online services, again rated second overall in terms of our service, and highly commended in the Best Group Risk Insurer at the Cover Awards. And actually in 2015, our CEO won the Cover Personality of the Year award. He's always in the media. He loves it. But he won't say that. But yeah, so he won Cover Personality of the Year. So really good for us because this gives us exposure for a lot of the advisors that we engage with. Like, you know, when it started out, who are you? Now we don't really know who you are. We're not quite sure if we want to use you. With this, as we raise credibility, actually what's happening is the guys are coming back to us and saying, all right, I heard about you there, be interested in doing some business with you, can we see, can we engage? So what role does the AIS play in all of this?
In group schemes, most members are covered automatically, and it's only those with the highest benefits who need to be assessed individually. They typically hold key positions in their company, so it's vital that the assessment process is fast, straightforward, and of course respects their privacy. Unfortunately, the way underwriting is handled traditionally means that it's often never even completed, resulting in shortfalls in cover. A large part of the problem is that papers are passed from insurer to advisor to employer to scheme member. Delays are almost inevitable, and there's huge scope for vital information getting lost along the way. By handling all communication electronically, direct with the members themselves, Ellipse avoids these problems. Once the scheme data has been uploaded, our systems identify who needs to be underwritten, and emails are sent automatically direct to the members concerned, explaining the need for the assessment and inviting them to complete a questionnaire. As the questionnaire is online, it can be completed at work or at home, whichever suits them best. To protect the security of the information they provide, we ask them first to register. Once they have done this, they sign in to our secure website and start the questionnaire. The questionnaire is reflexive. That is, the questions asked change according to the information the member provides. For example, if a member discloses that they have had high blood pressure, but only if they do, the system will ask the right questions to determine if it affects our ability to provide cover. Each question asked is designed to elicit clear, precise information that will lead to a fast decision. It takes only a few minutes to complete. At any point, if the member needs to check something offline or is interrupted, they can save the questionnaire at the point they have reached and go back to it later. Once the questionnaire has been completed, the questions asked and the answers given are played back to the member to check the information is accurate and allow corrections or changes to be made where necessary. Usually, cover is confirmed there and then. Occasionally, we may need specific medical tests to check a particular aspect of the member's health. If so, the system automatically issues a request to Medicals Direct. One of their qualified nurses then contacts the member within 48 hours to find out where and when would be convenient for them to carry out the tests. Only rarely do we ask for a general practitioner's report from the member's doctor. Although we keep members' medical details absolutely confidential, regular reports will keep you informed of which assessments have been completed and which are outstanding. The net result is that most members have their full cover confirmed in minutes rather than weeks or months, and the danger of shortfalls in cover due to delays are virtually eliminated. The risk of such shortfalls being laid at your door is removed, and the time you would have spent organising and chasing medical information can be used more productively. This is just one example of how Ellipse is creating a group risk insurer for the digital age.
We regard ourselves as a challenger brand, so everything we do is to look at challenging the way things are done and seeing if we can do it better, or not differently just for the sake of it, but always to improve. Ultimately, the goal is to improve client or customer productivity. So, as I said, you might question the cost of implementing this, the cost benefit. The cost was definitely higher than the immediate tangible benefit for us. But the actual benefit to our clients, it was better to implement this than not to implement this, the AIS. So looking at our straight-through processing rates, what has it been like? So we were 2010, as I said, back end of 2009 we launched. We had 70% STP in 2010, 70% across 10 policies. Really good, not high volume. Took a dip as volume started to increase, and then as we started to tweak and review, that started to head back up again. So that's this is the data across life, IP, and CI, the straight-through processing rate. To be clear, when we talk about straight-through processing rates, we have our view on straight-through processing rates is there's true STP, which is obviously whatever the system has generated and given you, as Lloyd said, as standard rates, loading, etc., etc. For us, STP is anything where we haven't required any further additional evidence. It might be referred to the underwriter. The underwriters call the client, asked a few questions, and we've made a decision without any further additional evidence on that. Looking at our days to completion or the days for a decision, this is important to us because this is where from a client or liability and the inconvenience factor for our employees, no evidence, cases that have no evidence, on average it's about 2 to 3 days because that's where we've had to call to clarify something. All cases is just under 10 days. The grey is kind of where we've needed medical evidence or where we've needed a GP report. To an extent, the grey line we can do nothing about because, as you saw in the video, the client determines when they want the assessment, if we need evidence. As a last resort, we'll call for a GP report. we've got no control over how long the GP takes to deliver. But with the medicals, it's entirely in the client's hand. If they say, I'm away, I can't do it for 2 weeks, well, we can't get it done for 2 weeks. We can't control that. Individual assessment requests and completions. So obviously the number of requests that have gone out and the number of each year, and then the number of completions. Requests, again, we can only, we can chase, but we can't force people to engage and to complete the process. But the number of completions also constantly increasing. And that's kind of significant for us in this market because of the way our competitors work in terms of the paper being shunted back and forth, and they send the questionnaire and then it goes back and then they get told you need these medicals and then it goes back and forth. In terms of that, a lot of them actually don't end up completing because if you can imagine the CEO or CFO, they just don't have time to constantly be doing this, so they just throw their hands in the air and say, forget about it, move on. Looking at the breakdowns by decision type, so 74% of our cases were overall have been standard rates. You'll see the actual loaded values as we've started to revise. We did a big piece of work back in 2014 together with our colleagues at Munich Re, looking at what's causing the loadings and whether they're still appropriate, updating, because for a period we didn't do any changes really to the rules or updates based on MIRA, and back in 2014 we've implemented a lot of the changes, brought the rulebook up and aligned it to sort of the MIRA decisions and the changes with MRC, etc., and we're starting to see a drop-off there. The outstanding cases, obviously, as I said, is totally driven by whether the client engages or doesn't engage. And then there's the postpone and declines, 0 to 1, and both effectively having increased to 2%. Again, so if you're looking at the volumes, our underwriting department is, excluding me, 1.5 people. So we have a trainee underwriter, and then we have an underwriting manager that kind of does that and the rules and manages the rule changes. And yeah, so as I said, this year we've underwritten close to 1,000 policies with sort of 1.5 people, and the system does a lot of the work for us. So it's made sense. We can increase our capacity and our volume on that. So what benefits has the AIS done or given us? It is definitely a unique differentiator. I can't understand why none of our competitors won't do this. I'm quite glad that they don't, but it just makes sense. If you want to grow and you want to scale, you should be doing it. But it gives us an opportunity as a unique differentiator. We have the fastest, most convenient individual assessment process in the sector, in the group risk market. High completion rates, and from a client risk management perspective, they know their people are covered. It's quite interesting. We've had a couple of advisors where they've gone through and they've insured their own schemes with us, and their exec have gone through it because they've needed cover, and so they've become proponents, for us, and they speak about it out in the market and become case studies for us there. And in terms of scalability, we're able to increase without increasing our costs. It's given us a unique opportunity. So typically what happens in the group risk market is you might underwrite somebody, so somebody gets underwritten and they get postponed or declined, and the insurers never review it again. So that person stays as a decline or postpone, and that decision gets carried with them as they move from insurer to insurer. And the scheme, in terms of the pricing, gets impacted because they've got these people that are declined or postponed within the scheme. We have the opportunity, and we can go to them and say, well, okay, we'll re-underwrite those people for you, no problem. Then you can decide if you actually want to move it to us. So we have the ability to pre-assess people using the technology because it costs us nothing. And quite often, we're able to offer terms. We want a scheme that is worth between 250 to 300,000. And we pre-assessed within that scheme, there were 40 people that needed to be assessed. And before they would be prepared, because the sums assured were quite high, between 5 and 10 million across all of them. The benefits were really, really high, and some of them up to 20 and 30 million. They weren't prepared to move the scheme knowing these people would lose their life cover. We were able to pre-assess all of them in a matter of 2 weeks, and then they could make a decision and say, yep, we'll move the cover to you, because nobody would lose cover. Actually, some that were declined and postponed previously now got cover. So it's given us an opportunity to do things that are unique, where for none of our competitors would be able to do that. There's no cost involved for us for a large portion, and for a few of them we might need to call for medicals, and yeah, we're able to secure that. So we were able to win that, and other schemes on the same basis, using the technology and finding other ways to do it. So 2016 and beyond, what does the future hold for us? Using the technology, we're able to do anytime benefits through workplace programs. So as I said, flex policies, a company might decide, well, actually, I'd like my client or my staff to buy benefits anytime. Currently in the UK market, within flexible benefits space, you can select benefits, but it's only at particular lifestyle triggers. So you get married, you have a child, you can change your benefits. You get divorced, you move abroad, or you come back, then you can change your benefits. This allows us to do benefits at any time, because we can underwrite them immediately at no cost. So it gives us another unique opportunity. We've been able to use this for top-up policies. We have schemes where they've said, okay, all the shareholders get 2 million, but hey, we want to be able to give them a sort of a top-up policy where they can buy additional benefits or additional amounts of life cover. No problem, they can do that. They're automatically underwritten, and they know what the decision is going to be. Again, something that none of our competitors offer, because their process is so slow. Similar to the anytime benefits, completely voluntary programs. With the flex benefits, typically if you've got a core level of cover that the provider is, so everybody across the scheme gets 2 times life cover, then the pricing is a lot more competitive, and then you can select benefits up above that. Whereas with pure voluntary, if everybody here wanted to buy, or you'd price that, and if one person or 2 people, well, minimum 2, but if 2 people were buying it, that's fine. We can underwrite them, whereas the others can't. And we can do this on a large scale because we have the technology to do that. Seamless quote and buy process. A lot of sort of the big employers are wanting to say, well, actually, we want to offer, similar to the voluntary programs, this quote and buy, and go to clients and say, yeah, you can offer this to your staff. They can quote and buy online as a group, and they'll do it. And I guess like versus diagnose, they'd be quote, they'd be underwritten, and they'd get a decision. I guess a lot of that is predicated on an upgrade to the AIS. So I've tried once again to talk to our colleagues to say, really, it'd be a good idea to just give us the upgrade, guys. And Paul, with his usual smile, said that would be nice, but no. And so yeah, we've not upgraded the AIS because we've had a lot of other things that when we launched with 4.6, and there's a lot of stuff that's come through that gives us a lot of benefits. A lot of the customization, so when I showed you the demo, kind of the pick list, that was a key thing for us. The technology couldn't offer at the time the ability to have pick lists and not have search. So we had to customize that back in 2009. And now it's there, so it just makes sense for us to, going forward, make use of some of the stuff. I think it's called sections. The ability to have sort of shorter questions and then drill down and fall down into a larger question set based on the answer. Again, that wasn't available at the time, and we needed that, so we had to build forms or build our own questions that will allow that, but it's there now. So a lot of the stuff that's there and available as core will give us benefits. The screens, as you could see, are kind of looking dated now. We need to upgrade. We need mobile technologies moved on, and we need the ability, because the members that engage can be doing it anywhere. As I said, our first guy did it 2 o'clock in the morning. He was traveling somewhere, so 2 o'clock in the morning UK time, but he was abroad somewhere, and he thought, well, I can complete this online. People are doing it on their iPads and on their mobile phones, and we need that ability for the technology to accommodate that at the front end. So that's kind of big on the agenda for us, again, in terms of the upgrade and the benefits that can come for us. Right, one last little slideshow. So one of the things that we said is kind of key to us is the productivity and the impact of the services that we offer on our clients. And so in the second quarter of this year, we went out to market and we said, we will publish our key service indicators across some of the sectors every quarter, whether they be good or whether they be bad, we will publish them. And really, I went out into the press saying, I'd love our competitors to do the same thing. Rise to the challenge and publish yours. So we publish a few key service indicators. What are they? Really, it's statistical benchmarks which track our service performance quarter on quarter. So the first area was obviously individual assessments. 91% at the end of Q1 were done without third-party evidence. Claims paid, 92% of our claims were paid within 5 days. Offline quotes issued by or within 3 days of the target date. 86% of them were issued. When I spoke to the journalist, he kind of said, is that really good? Only 86? Actually, 64% of them were issued by the target date. And I said, it's not where we want to be, but that's where we are at the moment. And we said we would publish these statistics. Because the longer that takes, that has an impact on the advisor because they've scheduled appointments with the client to review the various quotes. If they've got to keep chasing or missing that, they've got to reschedule. So it means their people have to be chasing, and it has an impact on their productivity. Again, love to see what our competitors do, because from anecdotal evidence, they nowhere near 50% within 3 days. So we'd love for them to start talking to us about it. Policy schedules issued within 5 days. One of our competitors, we know it takes them 3 months before they actually issue the contract that they've gone on risk with, and the client actually gets that schedule. So why do we do this? We've always said that advisor productivity is important to us. Back in 2009, our CEO went and published and said, we have no legacy systems to hold us back. We can supply better data, more efficient service to our clients, and positively impact advisor productivity. And we need to be showing this, because that's what we said we would do. And now we've got the data to start proving what our service actually is. And ultimately, it's good for the clients too. We want to be open and transparent, whether that data be good or whether it be bad. We will continue publishing. We've made a commitment to the on-time delivery, and we'll stick to that. Put our money where our mouth is. Greater productivity ultimately means happier clients. And the question we pose to them, are you using insurers that are careless with your time? We'll be bold, we'll challenge, and we'll hold ourselves accountable to what we're going to do in this market. And our Q2 stats, some have gone up and some have gone down. We've published them as well. We've gone out and we've said, yeah, we were 91 there, or we were 86 there, and we're 87 here, and we've gone slightly down here. Yeah, that's who we are. We're Ellipse and we're a challenger brand. Thank you very much for your time.